To some investors, the Halloween strategy is gospel. Let's find out more. I'm Rachel Jones and you're watching kalkinemedia. Gather round the torchlight for the story. It's centuries old and must be told in a deathly whisper. To those who absorb it, they have the choice to employ it and wait to see whether their portfolio enjoys it. This is the Halloween strategy. Now, dentists are a big fan of Halloween. For the aftermath of Halloween, parents arrive at the dentist's office, children in tow with a mouthful of rotting teeth. Another group of people who see dollar signs on October the 31st are a particular set of stock investors who subscribe to the Halloween strategy. So what is it? Well, the Halloween strategy is based on the premise that the stock market performs better from October the 31st to May the 1st. Therefore, the Halloween strategy is to buy stock on October the 31st or in the month of November and sell by May the 1st. So from May the 1st to October the 31st, investors who subscribe to this strategy either put their money into another asset class or leave their money dormant for those 6 months. Now, some may dismiss the Halloween strategy as hokum, but to some investors, the Halloween strategy is gospel. Although this strategy originated in the 16th century in London in England, it became popular again in the 1980s when the Wall Street Journal wrote a piece on the British stock market. The mantra, "Sell in May and go away," would begin to be chanted by investors in the lead up to October 31st, as they devoted themselves to the idea that May to November would typically be a bull market. So does the spell work? Well, the question of whether the Halloween strategy is legitimate has a lot to do with the validity of the efficient markets hypothesis. This hypothesis states that there should not be any overarching strategy whereby investors can consistently profit. The reason is, if such a strategy did work, all investors would exploit the strategy through arbitrage. However, in a study conducted by the American Economic Review, 36 of the 37 markets examined did in fact find that equity securities generated greater returns from November to April. Now, this finding can potentially be explained by higher risk in that period, which comes because of the calendar time anomaly. Shifts in interest rates, trading volume, and stock returns can sometimes be lower from May to October due to seasonal factors in the news. So is the Halloween strategy a truth or a myth? Well, like the existence of ghosts or Bigfoot or Jeff Bezos' hair, the Halloween strategy remains largely mythical in that many have claimed it exists, but who amongst us has actually seen it? Now, if you like this video, you can press the bell icon for notifications for our latest videos. You can also subscribe to our channel. I'm Rachel, signing off for kalkinemedia.